Hello, everyone. Welcome again to the next edition of the Money Capital podcast. My name is Kaya Butelez, your host. We've not been having a lot of these episodes, and I'm glad to apologize for that. For whatever reason, we've not been coming to you with a new episode. But I'm excited that I'm introducing today a very exciting segment of the Money Capital podcast, something which we've been wanting to do for many, many years, since we started this podcast. We wanted to bring you an entrepreneurship segment of the Money Capital podcast, where we look at the journey of different entrepreneurs in our country. As we know that, with an extremely high unemployment rate in South Africa, as well as the high inequality, economic inequalities, we've saw it fit that the only solution for the country going forward will be through self-employment as well as entrepreneurship. So I'm excited to be bringing you this segment. And today I have very interesting gentlemen in front of me. I want to share, they're going to share their stories today about their entrepreneurship journey. I'll let them introduce themselves, starting with you, Sizwe, and then the next gentleman next to you.
Thank you. Thanks, Kaya, for this session. So my name is Sizwe Salamani. I currently head the advisory department at Kuyasa Registered Auditors. That would be your accounting, tax, corporate finance, and secretarial. I'm also a tax, I'm registered with SIAT as a tax practitioner, and I'm also registered with SICA as an associate general accountant.
Oh, wow, interesting. So, when did your entrepreneurship journey? But maybe before we go there, let me hear from the gentleman next to you.
No, thanks, Kaya. Ongeziwe Nyenjana. I am a chartered accountant. South Africa. I'm registered with SICA, the Institute of Chartered Accountants. I'm also registered with ERBA, with the Regulatory Board of Auditors. And yeah, I'm a boarding auditor that's also JSE accredited. Within Kuyasa, I'm heading the external audit function of our firm. Thank you.
Excellent. So, who's the founder between the two of you? Are you co-founders of the business? Who's the CEO? Who's the chairman?
That's a good question.
Or are you nowadays there's a lot of CEOs running businesses.
So I think our model, I can say to you, Cole, in a sense that we in sync, our leadership and way of work comes naturally. That's how we eventually formed this together. When we initially decided to form it, we didn't even think of who's going to be MD, who's going to be this. As we went by, each person sat comfortable in their area of expertise, and hence now we figured it out automatically that I'm head of external audit, which works out perfect. He's head of advisory, which works. So you can say MDs,
MDs, co-founders,
co-founders as well. Yeah.
And then,
just to add in this co-founders thing, we also have a co-founder based in Eastern Cape. His name is Spumelele Nondanga. He's also a CA in RA. He runs the Eastern Cape branch. Yeah.
Okay. And where do you guys come from?
Well,
I'm sure you were born somewhere.
Yeah, well, I'm from Umzimkhulu, but I grew up in Johannesburg. I did my high school here, and obviously varsity in Johannesburg. Yeah.
And you live in Ongeziwe?
Yeah, interesting story. We come from the same place, Mzimkhulu, Ibis Township. I think his house is 2 streets from home. So growing up, we've always known each other. But I stayed there until I moved to Wits to do my undergrad. And he was already living here, but holidays he'd come home and would hang out as friends. So that's how we eventually then got to understand each other, our aspirations. And as the podcast goes along, you'll get to understand more how we eventually got to where we are.
Okay, excellent. And then the entrepreneurship journey. A lot of auditors nowadays, people who are trained accountants, finance professionals, you find them in these big auditing firms. If they are not there, they are either in government and so forth and so on. And for you guys, when did this entrepreneurship journey start? When did you say, we want to pivot, into working for ourselves rather than, joining one of the big, auditing
The
firms?
big four firms. Look, it's how we've always been. I think naturally we just had that entrepreneurial ambition, because before we even set up a consulting or audit firm, there's a couple of other businesses that we tried. We've done logistics, transport and logistics, purely because at home we from that space. So I did shed some onto him. And for a number of years, actually, we were focused on that. And to your word, we then pivoted at some point and we're like, hey, but we living our lives with this skill that we've studied and we executing it at an amazing level for someone else.
Yes.
That sometimes the ambitions don't align with what we want and where we want to get. And that's when we were like, actually, let's form our thing that's going to speak to our aspirations and where we want to take the industry of accounting and finance in its entirety. And hence we then formed Kuyasa. And how we eventually got to establish Kuyasa is I was an engagement partner at Sizwe Salamani, now
Yes,
Grant
which is one of the well, it's no longer the big four. Yeah. So because Sizwe Salamani, I think they also started a long time ago.
Exactly.
And they've evolved now, partnered with Grant Thornton.
100%.
Yes.
So when that whole merger with Grant Thornton happened, I was there. I was engagement partner, doing the ESCOM audit, Barlow World, and things like that. So I left there, I think, just over a year and a half to form Kuyasa.
And when is that? When was that?
That was this November 2024.
Okay.
That's when I decided I'm gonna pull the plug. And funny enough, at that time, the aim was not to form Kuyasa at that time. It was to say, let me go figure myself out, think out of the box and what I want to do. And automatically, and how it happened is when I was at home, Sis was like, actually, we have this client. We have the client, but we don't have the business. So, so then our start was backwards, because now we're sitting with the client that we already said, no, we're an audit firm. Then now we had to go back and fill in the puzzle and present ourselves as a firm. And whilst figuring that out, we came across a gentleman, Phumelele Nondonga, the co-founder, Sizwe referred
The one who's currently
in the Eastern Cape. Fortunately, he was also 8 to 5 like us, but had already registered a business at the time. So we thought it's better to use that business because it already had 4 or 5 years track record for our clients' purposes. Because now you can't get a client today, but your CIPCs, then they like, but you are. So to manage that, we came in with a name that has sort of 5-year-ish experience to say that we're small, but at least we've been in existence. And that's how we then...
That's how the Kuyasa was born.
100%.
And it took some convincing for him to come on board, because I think from my side, I've always been an entrepreneur. From start of my working life, I've been having, I've been trying to, hustle.
Explain that to me, because if you say that you've always been an entrepreneur, you see, entrepreneurs, because I know it from my experience, we are always big idea people.
Yeah.
And people who are accountants are more like they are big counters. They are conservative. They count each and every cent. They are risk averse. But for you to be an accountant and an entrepreneur at the same time, just unpack that for us.
Well, I became an accountant by what? it wasn't my, it wasn't my aspiration, but God said,
I was never
you're going to go through this accounting journey. And I followed through. But I've always had this entrepreneur journey or aspiration to say, I would like to, own 1, 2, 3, and 4. And through my accounting journey, that mindset was always there. I've in terms of making connection, with people in the industry, and also during obviously my working life, I started, making that what you call dream or idea to come true. So I've been working and doing, those whatever services. I don't want to mention because I'll get into trouble. But yeah, it has always been a parallel, kind of process or situation. And yeah, so obviously with Ongeziwe, we've always had chats. He was very hectic at his previous firm, so he couldn't. He was dedicated to that firm. I've always had conversations to say, look, man, at some point we need to do this. And then he said,
it was annoying.
Yeah. We would chat about the industry, etc. And then eventually, when he was still finding himself, that's where I snatched him to say, come on board, brother. It's time. And then with Spumelela, how I got to know Spumelela, I reached out to him on LinkedIn. He's a very open guy. And then, we started the conversation. We obviously did some work, accounting work remotely. And we started, setting up systems and all that. But we, in Johannesburg, the Johannesburg branch, formally started last year in January. Yeah, and then we started obviously adding staff up until now.
Excellent. Now, coming back to the managing of books, I'm sure you run books for many of your clients. And what we do here at Money Capital Podcast, we like to demystify finance. And sometimes you'll think that wealth building or the money management is an exclusive preserve of certain people. What we want to do is we want to make it very simple. We want to demystify it. What is one of the biggest misconceptions or mistakes that up-and-coming entrepreneurs make about managing money when you analyze their books? What are some of the things that come up?
Yeah, well, through my experience, obviously through doing the books and engaging, I've seen a lot of things happening. And the biggest one is funds mismanagement. Entrepreneurs cannot distinguish between a personal and a business expense. I've seen a transaction at some point, someone swiping 40K at some club, and you ask yourself, what?
Are you sure?
Yeah.
Okay, but I don't want you to be in trouble with with your registered bodies, professional bodies.
Yeah.
Are you allowed to disclose that type of
No, it was something that happened, long time ago. I wasn't registered with any, but I've seen it. I've seen it in a bank statement. It was years ago. But for now, the fact that you're swiping close with your business account, that is a red flag.
A red flag, yeah.
It shows that entrepreneurs need to go through a financial literacy course in a way. They need to be illiterate in terms of finances. And another factor would be your SARS compliance. That's the biggest one. Okay. Example, your VAT. Okay. VAT is the biggest factor. Entrepreneurs do not understand that you're an agent of SARS. That 15% is not yours. It's not yours. You do not. That's SARS money.
When you get paid, you pack it.
Yes, and there are other entrepreneurs who are, they not finance people, but they can, they can interpret, or they have that literacy. They take that 15% and actually put it in a savings account. And then when we do the books, comparing your input, output, they know that money is there. They don't have to go and dig it somewhere. So it's those kind of things, and also spending or based on a bank account a balance as compared to a budget. You've invoiced 5 million.
Okay.
Now already you have all these expenses in your head to say, I need to do 1, 2, 3, and even if it's not budgeted for.
Because that invoice, that's revenue. That's
Exactly.
not profit.
Exactly.
You don't pay your suppliers, you don't pay your people, you don't pay SARS.
Exactly. So those are the 3 biggest ones, especially in a SME environment. It gets better in a medium, in a mid-tier business, but at small businesses, those 3 are
And honestly, what could be then your advice to that type of a client? That type of a small business operator or even medium-sized operator who's now engaging in that type of reckless spending, spending from their business accounts, not taking care of. So what is then would be, without, letting go of your IP, but generally, what is it that entrepreneurs need to be doing to manage their money spent?
The key thing becomes forecasting, cash flow forecasting, which in financial terms is not exactly the same thing as a budget, but very closely linked. The premise or the principle is one and the same. So with forecasting, you look at your next 12 months and say, what am I expecting to get based on firm binding contractual arrangements? And then that gives you a view of how much you're likely to get beginning of the year for the rest of the year, barring any new work you're getting.
Yeah.
Then from there, you work out your expenditure. Again, you forecast, how much rent you're paying.
Office.
So exactly.
Suppliers. Yes.
On day 1 January, if we were starting 1 January, you know that from 1 January looking forward. And then from all you do, you run your business based on that, because that document is what would have gone through your governance structures and everyone approved it. They've tested it and stressed
Let's say I
it.
don't have a governance structure,
Which is my second.
it's a one-man operation.
And that's you
Or
getting,
two-man operation.
you're getting to my other point, to Sizwe's response, that another issue that leads to that financial mismanagement you spoke about is key man reliance.
Yes. Oh, yes.
We
Founders.
Yes.
Founders phenomenon.
You cannot tell me this is my business, I manage the bank account, no employee is gonna come in here and disperse funds without, I'm the one that should be paying for everything. Now, what that does, it leads to that exact same problem, because you running the business as if it's your own personal bank account. And one of the best ways to do it, you still need to maintain your separate bank account and a business bank account. The same way you pay your suppliers and employees, the same way you must pay yourself. If you run out, you wait like everyone else to get paid the next month.
So you run out, you wait until month end.
Like the rest of the people.
Yeah.
You're not any special. And I always say to guys here that even if you
But surely there is money in the bank account. So if I run up to not go borrow from the mashonisa, what do you pay?
how would you have survived? If it means that, then deal with that. But we've got to understand that a business is a juristic person and you're a natural person. We exist independently. The business has its own life, you have your own life. But now we tend to convolute and pollute the business because we're natural, they are juristic, and we pollute it by now going to say, I can't go to a mashonisa when I have this money. But it is real. Is it really yours? No, it's business money. It's because chances are when you're starting to dip in that money, remember you're messing up your forecasting. That 20,000 you're taking, it was to pay your junior clerk. Then now you start hearing stories on the corridors who are not paid. The stories of
payments.
Now we are aggressive to
There's lots of those stories.
It's
This
because
person is a well-known market.
Yeah.
But stuff is not paid.
Yeah, it's
I'm
because
paying an M4, yeah, M4, but my stuff
And
is
I'm
not
okay,
paying.
that is part outside, but stuff is not paid.
And what becomes sad is that those instances happen and a huge invoice was just paid last week.
yeah.
Then staff are not understanding that, but we've been paid 5 million by client X. This week you're telling us that. So financial management is a crucial component in small businesses. And like you said, we get to experience it in two forms. When Sizwe looks at the numbers and when I audit those numbers, so we get to have the complete picture. And I would raise in the small entities that you're not a going concern. That's a meaning that you don't have enough cash to carry the business for the next 12 months.
Yeah.
And what is that? It means you do not have enough cash resources to service your
Does that mean I have to have that enough cash in my bank account, or that is based on forecasting, on money from contracts, from invoices for the next 12 months?
That's a good question. You need to have money in the bank. Every month, every beginning of the month, we sit with our managers and say, guys, what is our cash requirement for this month? Who have we invoiced? When are they paying us? Do we need to follow up? Are they overdue? Why? Because we want to always have a buffer in the bank account. We don't want.
And how much should that buffer? Is it 50% of your expenses? Is 100%? 150% of your expenses?
I think it differs per entity. But first and foremost, it must cover your salaries. It must cover your operational rent, your lights, your water. If it covers you for that, first and foremost, then you can come back and sit and compromise on other things. But the key drivers of your business, like us, we loosely speaking, we always say we sell time because we consult. So what is your biggest asset? It's your people.
The staff.
Billable hours.
Exactly. And who builds? It's your people.
Application is business as well. That's what the best we do. We sell billable hours.
Exactly. So I gotta look after my people the same way as a construction company looks after its cat, the yellow plant. My yellow plant is the fuel. Exactly.
Now, coming back, entrepreneurs are we are not there just for charity. Entrepreneurs are in the space to make money. They want to make filthy rich. And I do not think that they are apologetic about being filthy rich. And in fact, any entrepreneur there, I just want to encourage them to say, don't be apologetic. Let us aspire to be filthy rich. There's absolutely nothing wrong with that. Now, you need to how do they then have to strike a good balance between building a sustainable business as well as also building personal wealth for themselves? How do they strike a balance between the two? See that?
Yeah, I think there's I think entrepreneurs have this misconception regarding that wealth versus, because a small business or a startup business or in your infant stages of the business, your profits or your cash flows should be reinvested into your company so that you can be able to grow the company. If you don't do that, then you are in trouble. And also remember, a business is not a retirement plan. So I've seen in practice that a lot of people, your profit or cash flow, they split it into stages. So meaning your operations, meaning your rent, whatever, and reinvestment, they would 80% or 70% or 60% of your cash flow is you put it towards that. Obviously your salary, the owner salary would be 20%. And then there's your taxes, 10, 20%. You allocate 10 or 20%. And then obviously there's dividends at year end, which you allocate as well to a 10%. So it means that your salary and dividends should be the two components that will build you wealth. So you need to take your salary, take the dividends, go out and look for more wealth.
Okay. Can you just practically unpack that for us? in rands and cents. Let's say per annum, I make 10 million. All right.
Okay.
Now, out of that 10 million, after having paid my people, after having done all sorts of things, what should be the component that pays me a salary and dividends and so forth and so on?
So as I said, 60 or 70% reinvest that money into
Or
the
60 to 70, you
Yes.
reinvested. Almost 7 million goes back to the business.
Yes. Or 6 million for
Or
that.
even 6 million. So I'm
You
left
know,
with about
40. So between that 40, obviously, probably to what, 15% or 28% needs to go to allocated to SARS, whether through income tax or VAT. Obviously, you pay yourself a salary. Well, we are the last to be paid, in business. You pay yourself a salary, and then the remaining you declare as dividends.
Okay.
Yeah.
You declare as dividends, or you choose not to declare, isn't it?
Yeah.
Because
Yeah.
you're not forced to.
Yeah, you are not forced to, So, yeah.
Because
That-
you've got to look at the sustainability of your business.
Yes. And
If you're not in a dividend paying situation,
you can't.
you can't.
And
That's why the Companies Act then says you have to perform a solvency and liquidity test of the business to say, is it solvent, is it liquid? If only those two are checked,
then you can declare.
but if you're failing one, it means that you have a problem you need to address first. How are you then taking from this same business that you need to be helping?
And yeah,
And that's how you need to look at specifically the dividend paying out option. And 100% Sizwe is correct. We need to distinguish for wealth purposes, to your question, that your wealth stems around the success of the business, right? You need to understand that. And you then need to ensure the sustainability of this thing that's going to afford you the wealth you want. The wealth you're going to get from this thing is through
So
the
we give priority to the business.
Yes, it has
Not
you.
my lifestyle.
Because you're not generating any cash. Instead, you're taking from this. So nurture this thing to blow up as so much.
In a situation where I'm the founder, literally I'm the business, how then do you? Without me, there's no business. How do you manage that?
So for me, I think you just have to carry the same principles. You have to carry the same principle. Even if you are, let's say, you are, what do you call it? Personal services. The was sort of trader.
Yes.
That one. You at the end of the day, once we start giving you the terminology sole trader, personal services provider, you are now the business. You need to view yourself different. You're no longer Kaya now.
Yes.
There's a natural.
Yes.
Now, I would say you've actually transformed yourself to be a business. Then you got to apply business principle in the way you conduct your finances and the way you look at your work. And then in that scenario, financial management is even more critical than a fully fledged business. Because now the line between you as a natural person and the business
is been blurred.
Exactly. Now, you feel like when you can easily go take out money and say drawings, it's my drawings. But you can take out money to pay the club and say drawings but the substance of that transaction, it's not serving you as a business. Kaya as a business, not Kaya as a natural
There's a natural person.
Yeah. So in closing from my part is you got to look after the business first. If you're a wealth-driven person, happy, fine. And I remember my old boss used to say, there's no shame in asking clients to pay you what you've worked for. Because sometimes small businesses, my manager will be afraid to go follow up in an invoice. Can we now follow up? And I'm saying, guys, we worked for that. We're entitled to it. Ask for your money.
That's your money.
Yes, that's your money. So if I take it back to us here, the fundamental thing that made us open this thing was one, with wealth, yes, in the back of our mind. But the key was to say, how do we create a corporation that's going to hire a black child of at least 500, of at least 1,000, right? And obviously, with that comes wealth. And that's what people miss. Don't think about yourself. Nurture this thing to blow up so much. Because if you're making R1, you cannot pay yourself R1. But if you're making 1,000 rand, you can pay yourself 500. The more this thing gets
So
bigger.
in other words, we must not pursue wealth,
No.
pursue to be filthy rich, but come up with a big idea which is bigger than you.
For instance, our idea,
I like that.
we've looked at.
I'm not changing my statement. A statement I made earlier.
So we've looked at the market, the finance, accounting, and you say, okay, you've got we're operating in South Africa, you've got the big four firms, Deloitte, KPMG, EY, and then you say, these are big corporates with 100 years of experience.
Yes.
We've barely a year experience. But now we're coming into that space. Who are we? Can we even move them? And the purpose is not to move them, but it's to occupy and cement our own position in the local market.
And how do you carve your own position in that space with all these dominant, players that are globally respected? And then you are going into that space, you're actually carving a niche for yourself. I mean, how do you take us through, the thinking process in achieving that?
So what we've and that's exactly our premise and what drives us. We've seen a gap in the market in a sense that we all just know the big four firms. One, we need to say, is there a local South African powerful black owned firm? No. If you count big consulting firms, you cannot count any black firm.
Seasons on over?
It's arguable now because of Rand Thornton.
Oh, okay. So then they're no longer black.
Yes, they you could say they sort of a hybrid, but we want to do it in the South African way without any intervention from any foreign stakeholder. That's one. We want.
But in the context of GNU now, can you realistically have like 100% owned firm?
You can.
You can.
You can. We are. We can.
We are. You're looking at one.
There's no
Do
limit.
you hire white people? Do you have white people in your? If we walk around, what?
No.
Is that deliberate or just is a natural thing?
That's actually a question that has come. For now, we're not looking into hiring any of them, but in future, when we grow up, it's inevitable.
Okay.
But for now, at the stage we focused on black talent that either does not have a job, that is sitting with qualification. We want our impact to start from the communities in that case. Take those, because they have so much potential, but they've never given it a chance. So we focused on, we don't want to fight for talent that's sitting at RMB, FNB, no. But there's guys that are sitting at home that are as equally capable as those guys. And we focusing on we're building a home for them, and we're saying, thrive and become the best person that you can be in our environment. And and you've got to understand that it's not going to happen overnight. Probably what we're building, we won't live to see it. But the people we live with,
The next generation.
it will see it. Because like I said earlier, and like you said, that how easy is it to penetrate a market that's dominated by companies that existed 100 years? You can't do it overnight. But we've got to leave it in a state that when we hand over the baton, it's easy for someone else to reach those.
I like that. I like that. When you're building for the future, you're building for the next generation.
The next generation.
I love that. Instead of just building for me to accumulate
And
then consume.
And I was telling Sizwe, and I'm saying we must be careful when we look for advice from fellow young entrepreneurs, because the ambition and vision might not be the same. They want wealth in their lifetime. We want it, but there's something that need to be stages before we realize it.
Around it. Season, coming back to your point around wealth building now for the entrepreneur, what areas to look at? I mean, you spoke about at least 30 to 40%. I must leave that as for my personal wealth building. Now, what assets to look at? Where do I put my money? Now, I would imagine that in your advice, in your world as an accounting, professional, you advise businesses, but at the same time, you also advise keeping their personal capacities.
Yeah, correct.
So what assets do you look at? I don't want us to venture into investment advice.
Yeah.
But anyway, you can just talk in general.
Yeah, I think, I don't know whether it's personally or through obviously industry experience. Normally, you don't put all your eggs in one basket. You try and diversify. If you have that little cash or capital or whatever it is, you are likely to break it down, by 3 or 4 layers.
Okay.
Obviously, a portion of it will go to something that will give you dividends. Obviously, those would be your JSC listed entities that will give you such. And then obviously the second layer would be property. I would go to property. Obviously, not any kind of property. I do, I always discuss this with Ongs that, student accommodation is something that is, thriving in terms of, a rental income. If you want a monthly income, invest in that sector. Obviously, the last one would be investing in a SME business where you'll add value. You'll be part of, those charged with government, or management. So those three, I would, if I were to, have that little cash or capital,
And
I would look at those 3 spheres.
And also something to avoid, actually, to that question, debt.
Debt, yeah.
Okay.
Part of actually building wealth is avoiding debt.
And how do you do that? Because I want that Maserati. I want to show my people that I've arrived. True. So I want a Maserati. In fact, as I was driving here, I saw the Austin Martin, an SUV Austin Martin. I said, that looks nice, actually.
We all want it. We all want it.
So how do you then strike a very good balance between going for that 4 million rand Austin Martin versus building wealth for future generations?
That is tricky, and it's it's inevitable.
Financial discipline.
So as a business, at times, we've been told this at school. When you do that subject, corporate finance, and you are doing what's this capital budgeting or whatever it is, you are always told that is
Not good.
well, it is good. It is good. They say that is good, actually.
Yeah. How do you then? Because in my experience, I've been in the asset management space for many years, and they could expose to that field, but do obviously not, doing co-investments, and more of like supporting, those lives. In all my experience, working for multimillionaires, working for millionaires, I've never seen them using all of their money.
Yeah.
They always use
Someone else's money.
they are balance sheet, but they are using someone else's money.
Yeah, that's what capital is doing. You want a 3-story student housing. Unfortunately, the market says you need to get that 80% of that, from banks. And also, it's tricky because not everyone has a stronger credit score, in terms of your companies, etc. At times you are told, the bank says, give me 60% of that total amount. Where do you get it as a small business? Businesses that strive, obviously, who have been in business for longer periods are the ones who benefit, from this whole thing. As startups, it's very difficult. Unfortunately, you have to save your own, either personal money, or you save you save through these dividends, in order for you to get whatever you want.
So if you look at businesses, and they've been analyzing their books for many years, and you see this business revenue as is not going anywhere. Those that are small, they just remain small for many, many years. So what would be your intervention to make sure that business grows? And how do you make sure that they actually scale up? Ongeziwe?
Sure. So it happens. It happens that you come across clients that you feel are stagnant. And to your point, when you analyze revenue over the 12 months, you see that actually this is worrying because there's no light that seems to be near. And I think we are advisors and partners to our clients. So we owe it to them to give them that foresight of such instances.
But they have a responsibility as well.
Yeah.
To also be part of, scrutinizing their own numbers and making decisions.
So now the challenge becomes, one, to Sizwe's point, is that they don't have the governance structures. In fully set corporates, you'd have a committee that looks at that specifically. But in SMEs, where we're sitting is you, unfortunately, as their partner or advisor, have to bring it to their attention. Well, even if they know, but at least now it's coming from an external person and say, look, guys, I'm worried about the sustainability of this business.
Okay.
And I've looked at your books. I'm seeing your revenue is pretty consistent. Now, we're sitting across the table with probably you as the owner, and I'm saying, Kaya, what are your plans for this business? Why am I asking that? I want to understand. Do you have a strategy going forward? Do you have a sustainability plan? Are the clients on the pipeline? Is the work coming? Is there a period where you're going to turn this around? And if not, then that's when we need to develop or build a strategy to say, how do we turn this thing around? Because if it's not growing, that means something is wrong. And the risk is that it's going to go down from here if we don't put in place a measure to take it to the next level. So the response becomes, if there's no clear plans and commitments that are going to turn it around, is to say, my man, my sister is the owner. Let's sit down. If we need to bring in a strategy expert to sit with you, you tell them your vision and they pull it together in writing and they tell you, this is how you go out to market. Then try get source clients for what you're doing.
Do you also offer that service
We
as part of Kuyasa, or is that something that
we
have to outsource?
we do it. I've done, fortunately, I did my MBA, so part of the key component of that was strategy and looking at sustainability of companies and modeling. So fortunately, our clients get that as a value add from us because we have the expertise, but not a fully fledged function. It's probably something we're looking to develop. Yeah, but for now, it's a value add to our clients.
Just to add in on Ongs, I think a lot of entrepreneurs struggle with structure, inside the business.
Governance.
Governance. And they treat the business as a hustle in a way. So it's more of
I think
a owner.
How do you then graduate from
You say it's a side hustle.
to a sales business?
But so I'm still coming to that. And also, when you have that mindset, now you begin to fail with systems. Number one is systems. Two, you have proper systems in place. In terms of, let's just make a typical example, in terms of your finances. How do you capture, an expense to paying it? What is the process in between? Or you take it yourself.
Systems, and I'm going to speak as an entrepreneur myself. Systems, sometimes they hold you back. They slow you down.
So
Because the reason why we are actually working for ourselves is to get rid of, bureaucracy as much as possible.
But how do you
So that
grow?
things must just flow.
How do you scale and grow?
And then you're not nimble. So in other words, it must be a very good balance between being nimble and being agile as a business and also having a little bit of controls in the business.
No, agree.
Agree.
Agree, but
you I get you. And the key word with what you say is balance.
Yes,
Because
yes,
the risk is the more you become bigger, the more you'll fall short now of controls. Because now, how do you manage 200 people when unfortunately when you're managing people,
when there are no
yes,
systems,
the challenge becomes when you have that much of a staffing goal. It's easy managing, let's say 20 to 50, you can get away. But now if you start big numbers, how are you going to account for 100 people? You need a timesheet system where you can pull a report and see, is my 100 productive? You're not going to see them 100 physically. So it catches you out the more you go.
And also you need some financial visibility. What do I mean by that? Your monthly management accounts, your financial statements. How do you know that business is growing if you can't see the numbers? That's a process. That's a system. It's either you outsource it to an accountant or it's internally done. So you will choose which one is better for you.
My word. I've enjoyed this conversation. Last one now, as we close. Sizwe, this one is for you. You're gonna tell me about your personal journey, where you've lost money, and what lessons you learned from that, and how did you bounce back? And for you, as a parting shot, as we close, this episode, you're gonna tell me about what financial habit or mindset that you'd like to impart to the next generation, so that you can assist them to build generational wealth. Starting here.
Wow, Mr. Kaya, we're still young, I'm thinking now which journey that I lose money.
Look, we lose money every day.
We lose money every day.
It's complicating it. We lose money every day. We coach clients. And when we sit back, we're like, we actually do the ground.
We left money on the table.
Yeah, so I think it would be that under, some clients.
Listen from that.
Yeah, obviously. Yeah, let me just give you context. Some clients would just give you a rough overview, like a high level. And then you get there. There's a lot of work to be done. The code is already there, It's small, and you're looking at the resources that you need. It's not gonna
and
talk.
You can't change the code anymore.
Exactly, So and also we tend to code based on telephonic discussion. Look, I need 1, 2, 3, and 4. One day, and then you say, "Oh, okay, I have a rough idea or an amount for you." You put it on the spot. So what we've done internally is that we don't just issue out codes based on a telephonic conversation. We need to have a meeting.
A brief in writing.
Yes, a meeting.
So that's the lesson.
Yes.
No, I want everything in writing.
In writing. Yes. We go to the client, we understand the business, because some businesses are complex. For example, I know we had a financial services business that we thought it was very small when you looked at it, but in terms of
the work effort
and compliance, it's highly regulated. It's those kind of things that we need to have, insight of, and then give you a reasonable code. So that's the system that we've established internally. And obviously it was through losing money, So that's in terms of my entrepreneurial journey or business journey. Yeah, I think that tops it up, Okay. Yeah.
Parting shot. Look, I think Kaya, one thing for me is, if you know,
probably in the next 20, 30 years, what you're gonna share with me now is gonna change. But
definitely
what you can
get me now. So one is, if you're not from a finance background, do a course, either a short course online, free of charge, just what we call finance for dummies, or for many years, the basics of finance one. Even if you do accounting as well, it's just going to give you another perspective of looking at money. We don't say go study a qualification. These things are online, YouTube, that have financial education. That's if you don't have. Another option is actually look for mentorship. There's a lot of people that have we here, and I always encourage people, we're in the space. I won't charge you for having a conversation with you for 10 minutes. But most importantly, financial discipline, it's very difficult because it must be, you learn it, Similar to how when you lose the discipline, you hear people say, yo, I'm an overspender. Where did that come from? And it goes way back from how you grew up at home, how you saw your mom manage the rents and sales. And then from there, you start respecting money that as a kid, if bamnike, let's say 10 rand for school, you think tomorrow, maybe if I eat 5 rand, I'll have another 5 for tomorrow home. So the principles of financial literacy go back, way back. But what's killing us, especially people with our age, is liking things, for lack of a better word. And what liking things means is that you start living life that's above your means. How do you live life up?
Liking things. Can
You spoke to me about it. You said you wanted a Maserati. You wanted a, so it's basically one.
So we must stop liking things.
Like them, but work towards them. I love things, but I understand that I've got to work towards them.
Or buy them cash.
That's where I'm headed. Exactly where I'm headed. That I want that Aston Martin, but I'm saying if I'm gonna buy it, at least let me have a 50% down payment. If I'm forcing matters, but I cannot just go blind and say, "Give me it, I'll pay 100,000 installment per month." And it goes to my earlier point that avoid debt by all means as an individual. In a business, you can take it strategically for expansion, valid. But as an individual, personally, avoid debt. Learn the habit. One of my regrets is debts that I took when I was not that financial smart. And I'm like, I would be far had I not done made this decision. So avoid debt. Learn to live with cash that you have and accept things that you don't have, but work towards buying them cash to a point. And when you take debt, you feel like for today, you're the in thing because you have the Aston Martin. But 10 years, 20 years to come, who will have it for eternity? I will have it because I'm sitting on a solid foundation of cash. Debt, interest rates change now in Again, it hits your pocket. I was even having a conversation with myself on properties I own, and I'm like, did I have to get these properties because now the bond is killing me? When I took the bond, it was 11,000. Now it's 17,000 for the next 20 years. I have another 15 years that I'm going to have to pay with this debt mistake in inverted commas. Can you see that for the next 20 years, I'm probably set behind then Sizwe that's going to save up and buy that property in 10 years, cash. And that's why I'm saying we should respect debt, especially as young people, because we can't draw the line between wants and needs. If my friend Sizwe buys an A class, I'm not, let me go and buy an S3. But can I afford it? So, and peer pressure messes up that line of financial management.
And as entrepreneurs, it's something we cannot afford.
And it's sad because I have friends in the tender space, and there's no regard of debt and financial management whatsoever. An invoice comes today, it gets blown. The next week, this person is saying, you have got this PO. Don't you have 100,000? But I'm like, you were paying 2 million last week. I never had 2 million, but I have 100,000. So that's the. I respect debt, and to my kids, I'll always point it.
Or you fear it.
Both.
Basically, I don't like it. I don't like it. I just feel like it's a burden that sticks with you. Now you're getting calls from banks as if they're your friends. But and the calls are different. If they're calling you, you owing them versus they want you to buy with your money, the conversation is different. And so I'd say to any peer of mine and any person that if you are in debt, just pause and say, I'm not gonna work on anything going forward. My work is clearing this thing. Okay. Then I start afresh. Your quality of life changes. Your stress levels. Yes. Then all of a sudden you're like, hey, Kaya is such a chill gent. It's because
it's when it does
I think that's a great way to end it. Thank you very much, gentlemen, for your time. And
may Kuyasa grow.
Thank
May we see Kuyasa equal the likes of Deloitte in the next 10 years,
Give us
or maybe 10 years.
give us 10 years.
Yeah. Thank you very much for joining us on this episode, the entrepreneurs segment. I think I enjoyed this episode today. Not only did I enjoy it, I also had fun. I was also educated. I think the lesson for me is, try as much as possible to live within your means.
Exactly.
Try as much as possible to avoid debt, especially in your personal capital. Avoid debt as much as possible. Thank you very much. Thanks for joining us. Until the next time. That was the Money Capital podcast episode. Please don't forget to subscribe. Don't forget to follow us on our different social media platforms. Cheerio. Cheers.